Welcome back to Investing Talk Podcast. Today we're embarking on what I think is a really fascinating journey, peering into the future of air travel through the lens of one particular company, XCF Global. This business stands right at the forefront of sustainable aviation fuel, an absolutely crucial topic as the world pushes relentlessly towards decarbonization. XCF Global is positioned uniquely within that monumental shift, and we're going to unpack why. Before we really get into the weeds with XCF Global, if you find this deep dive valuable and you want to keep getting these shortcuts to being well-informed, please consider subscribing, liking, leaving a comment. Your support truly helps us bring these analyses to more people like you. And if you're feeling extra generous, your support by considering buying us a coffee goes a long way too. Let's explore this. So let's start with the basics. Who exactly is XCF Global and, why are they generating so much conversation in the sustainable energy space?
Well, XCF Global is, quite remarkably, the only publicly traded pure-play synthetic aviation fuel company in the United States.
The only one, pure play.
Yeah. Their entire business model is centered on developing and operating these state-of-the-art facilities that produce clean fuels. Specifically, they focus on sustainable aviation fuel, which, we often call SAF, and also renewable diesel. Their mission really seems deeply rooted in speeding up the aviation industry's move to net zero emissions.
Okay, that pure play aspect really stands out, focusing solely on synthetic aviation fuel. For our listeners, what does it truly mean to be pure play here, and why is there specific focus on synthetic fuel rather than, say, biofuels from waste? Why is that so significant? What kind of strategic advantages or maybe unique tech hurdles does that path present?
That's a really good question because it's not just a label, right? Being a pure play means their whole strategy, their R&D, their capital spending, everything is laser focused on this specific, pretty high-tech corner of the SAF market. This specialization, well, it lets them potentially innovate faster and get highly efficient in their chosen niche. And when we talk about synthetic aviation fuel, we're usually talking about fuels made via processes like power to liquid. These often use captured carbon or maybe green hydrogen as the basic ingredients, rather than organic stuff like plant matter or waste fats.
Right. Different starting point.
Exactly. And this can offer advantages maybe in terms of feedstock availability down the line and potentially a lower carbon footprint compared to some traditional biofuels. Though, the tech challenges and the sheer cost of scaling these synthetic pathways can be pretty substantial.
Makes sense.
So they serve major players in aviation, putting themselves right at that crossroads of energy transition and decarbonization in transport. Founded just in 2023, headquartered in New York, and the CEO is Mihir Donch.
Okay. Founded in 2023. So this company is really new to the public markets, isn't it? What's their journey been like getting here?
That's right. Very new. XCF Global began trading on Nasdaq on June 9th, 2025. This happened after what's known as a business combination with Focus Impact BH3 Acquisition Company.
Okay, the SPAC route.
Exactly, a SPAC merger. For listeners who might not know, it's basically a shell company that raises money just to find a private company, like XCF was, and take it public. Because it happened so recently, there's just very limited historical price data for investors to really dig into.
So for all intents and purposes, they're just getting started in the public eye. What does their stock price look like in these, very early days? What, if anything, can we glean from that?
Well, as of June 24, 2025, the stock was trading around $159 per share, something like that. Since listing, the shares have shown some modest volatility, which is frankly quite typical for these new SPAC combinations. You often see some initial price movement as the market sort of figures out the new company. We haven't seen any really significant sharp swings reported so far, which could be a decent sign of stability early on, but it also means there just isn't a meaningful 1 month or longer trend to analyze yet. It's just too soon. It's really crucial for investors to understand that these early movements are often more about market sentiment and that initial positioning rather than, long-term fundamental performance.
Okay, so given that recent public listing and the SPAC background, what can we realistically say about XCF Global's financial health right now? I'm guessing the full picture isn't quite clear yet.
You're absolutely right. As a newly public entity, especially coming through a SPAC, those detailed quarterly financials, they just aren't widely available yet. It's a common situation. However, what we do know, and this is important, is their new Rise Reno facility became operational and revenue generating in Q2 2025.
Okay.
And they've already completed their first commercial deliveries. That's a very positive sign, right? It shows they're moving from just development into actual production and well, sales.
So they are making money, which is good, but the full scope, the details of their financial performance isn't out there yet. Can you maybe elaborate on what specific financial figures we do have and what they might indicate for a company at this stage?
Sure. Specific figures for overall revenue, net income, or their exact debt levels, those aren't disclosed in the current public filings. Investors should really expect their first earnings reports within the next, say, 1 to 2 quarters after listing. That's when we'll get much more transparency.
Okay.
What we do know is that their earnings per share, or EPS, how much profit per share, has been negative. For instance, it was about -2 cents in fiscal 2023 and -6 cents in the trailing 12 months ending September 2024.
Right, negative.
And furthermore, their free cash flow, or FCF, basically the cash left over after running the business and investing in equipment, that's also been negative. We're looking at figures like minus $0.11 million USD in FY 2023 and minus $1.58 million in the trailing 12 months ending September 2024.
Okay, so for a listener maybe new to these terms, why is this negative EPS and SCF pattern actually common, maybe even expected, for a company like XCF Global right now? What does it really signify?
That's a really important point to clarify. These negative numbers are very typical for companies in these early growth stages, especially ones in, capital-intensive industries like fuel production. Building factories costs a lot. It basically indicates they are making significant investments into building out their operations, constructing facilities, funding R&D. They're essentially burning cash now, investing heavily to build those future revenue streams and scale up.
Got it. Investing for the future.
Exactly. It also means you can't calculate a traditional price to earnings or PE ratio since earnings are negative. And return on equity, ROE, is also negative. Again, quite typical when a company is still getting its operational base set up before hitting full profitability. It's a sign of active build-out, not necessarily, a sign of poor performance at this stage.
Okay, that makes sense. So every new company, especially in an emerging sector like this, has its pros and cons. What are the key strengths and maybe the potential red flags for XCF Global right now?
Well, one of their biggest strengths is definitely that first mover advantage we mentioned. Being the only pure play SAF producer listed here in the US, that gives them a unique market position.
Right.
Plus, having an operational facility, that new Rise Reno facility that's already making money and delivering product, that's a very strong positive. It shows they can execute, not just talk, which is critical for an early stage company.
That first mover advantage is compelling, especially with a facility already working. But, new ventures like this always have risks. What are the key red flags investors really need to consider before getting too carried away?
The main red flag is precisely what we just talked about.
I know.
The current lack of really detailed, comprehensive public financial statements. It just makes it challenging to fully assess profitability or, cash flow sustainability right now. You're investing more on the future potential and what they're doing now rather than a long financial track record.
Makes sense.
And additionally, these early stage companies in capital-intensive industries, they always face significant execution risks. Trying to scale up production, manage costs effectively, building these kinds of facilities on time and on budget, it's never easy.
So how has the market reacted to their debut so far? What's the general feeling out there about XCF Global?
Well, news coverage generally seems pretty optimistic about XCF Global's role in, decarbonizing aviation. Their CEO, Mihir Danj, has been quoted saying things like, "We're proud to begin our journey as a public company to accelerate development of our SAF platform," which kind of reflects that positive forward look. Social media sentiment, looking at recent posts, also shows a generally positive buzz. You see some retail investors getting excited about having exposure to sustainable fuels this way, but traditional analyst ratings, they aren't out yet because the listing is so fresh. We definitely expect coverage after their first official earnings report, though. That'll be a key moment.
Okay, so where does XCF Global fit into the bigger picture? Who are their main competitors, and how do they really stand out beyond just being that U.S.-listed pure play?
Right, good question. Compared to others like, say, World Energy, which is a big player, but it's private.
Okay.
Or Neste, a global leader in sustainable fuels, but listed over in Finland, XCF Global offers that direct U.S.-listed exposure focused solely on synthetic aviation fuels.
That synthetic part again.
Yes, it's a critical distinction. While Nest, for example, has a broader portfolio, including biofuels from waste and residues, XCF Global's specific focus on synthetics means they're targeting an emerging, potentially a very high-growth segment. And this segment is heavily driven by regulations mandating lower carbon emissions from airlines, which are just getting stricter worldwide.
The pressure is on.
Absolutely. Major airlines are already making these multi-year commitments to buy sustainable fuels. It really highlights the demand. So the differentiation isn't just the listing, it's their specific tech pathway, the feedstocks they plan to use. It positions them for a particular, very dynamic slice of the evolving SAF market.
Okay, we've covered their foundation, their early market signals. Now let's pivot to what investors are always keen on, the future. What's on the immediate horizon for XCF Global? What are the big risks and opportunities shaping their path?
A major upcoming catalyst, no doubt, is their initial quarterly earnings release. We expect that sometime late Q3 or maybe early Q4. That's going to give us the first real detailed look at their revenues, their operational costs, their whole financial structure after going public.
The moment of truth, maybe.
Well, perhaps the first chapter of truth. It's when a lot of that current financial fog should start to lift, giving a more tangible picture for investors.
And on the flip side, what are the potential headwinds or risks they face moving forward?
Key risks certainly include that execution risk we keep mentioning. The challenge of scaling up production capacity efficiently, cost-effectively. Building and running these complex facilities is a huge undertaking. Also, regulatory shifts. They could impact subsidies or incentives for sustainable fuels, which could change their cost structure or how competitive they are.
Right. Policy matters a lot here.
It really does. But there are also significant tailwinds pushing them forward. We see increasing airline demand for low-carbon options, driven by both corporate green goals and those tightening environmental rules globally. Governments everywhere are tightening emissions standards. That creates strong policy momentum, pushing the whole industry towards solutions like the ones XCF Global is developing.
Okay, so wrapping this all up, for someone looking at XCF Global right now, what does all this information boil down to for their investment decision?
Well, based on what we know today, a hold recommendation is often suggested for XCF Global at this point. Look, this company offers unique early-stage exposure to the only pure-play synthetic aviation fuel stock listed in the U.S. That's appealing. It addresses a really urgent need in a rapidly growing market segment, and it's backed by that strong regulatory push towards decarbonization.
Right.
But the current lack of detailed financial disclosures significantly limits how well we can see their near-term profitability or balance sheet strength. It's a crucial consideration, especially given how much capital these kinds of industrial scale-ups usually require. It's definitely a promising opportunity, but it absolutely comes with those inherent early-stage unknowns.
Yeah, it really feels like a classic case, doesn't it? An innovative company, exciting new sector, but with that typical early-stage financial, well, fuzziness. You might want to hold, wait for more clarity from those upcoming earnings reports before maybe considering adding more or jumping in if you haven't already. It feels like a waiting game for more concrete data. This deep dive into XCF Global really shows us the exciting and sometimes, let's face it, challenging landscape of investing in these emerging green technologies. We've seen the incredible potential of being a first mover in a vital industry, but that's coupled with the uncertainties that always come with a company so new to the public stage. So as you reflect on this, here's something to chew on. In a world changing this fast, how do you personally balance the sort of allure of groundbreaking innovation and a really critical mission with that fundamental need for clear financial data when you make investment decisions? Are there maybe non-traditional metrics that become more important when you're trying to evaluate a company that seems poised to maybe change an entire industry? Something to think about. That's it for this deep dive.
Thank you so much for joining us. We hope this has given you a good shortcut to being well-informed about XCF Global. Until next time, keep learning, keep questioning, and keep exploring.